G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Be sure to check out my links below, including exchanges I use and the social media content that I post. Alright, let's go. So really the topic for this video, we're just going over what's going on out there. There's not much today, it's a pretty boring day. Just going over going on with insiders and fear and greed in the crypto market. And just a bit of the Bitcoin price. It's going over the imminent death cross. It's just about to occur, and explain what that has done in the past, and just some other charts, and go over what is what's tracking at the moment, what we're getting, and look at some predictions, but just what's overall the sentiment in the market. Okay, so first up, we have NVIDIA insider trading alert. Another one from bar charts. I love these. CEO Jensen Huang ain't slowing down. He just sold another 24.6 million worth of NVIDIA shares for a grand total. He's all up now. It totals $530 million in the last 7 weeks. So I've been covering this, okay, in many videos, and it's good to keep an eye on insiders because they know a lot more than the general public. Even like Warren Buffett, for example, one of the greatest investors of all time. We mentioned this in the other video that he sold half his Apple shares. It's its biggest holding. It was 50% of Berkshire's entire portfolio. Now it's only 30%. So he's almost sold half of what he had. Okay, just a little under half. From Q2 to Q1 this year, he sold a little bit in Q1 and sold a lot more in Q2. So he's looking at an impending crash because he doesn't see any discounts or bargains in the market. Also like someone like, what's his name? Jeff Bezos from Amazon. He's another guy. He's been selling billions. So he's getting out as well. He's seeing some not quite good-looking forecast for especially earnings and that ahead for Amazon, and he's seeing multiple companies in the same boat, and he's getting out now, just booking his profits before we get a good correction in the overall stock market. So now you've got NVIDIA's Jensen Huang, and he's selling more and more and more. He keeps dollar cost averaging out of this market, and he sold $500 million. So But this guy says, lol, it's less than 1% of his holdings. Yeah, okay. Anyway, people can talk about what they want, but at the end of the day, he's selling, okay? And it's consistently. He's not hiding it. It's all in the proof of the pudding, okay? And if you click into it, you can see a bit clearer the amounts owned, and then the prices he's selling at, okay, and the amount of shares he's selling, okay, and that's how much, okay, so how much dollars worth, and it's all on file, so no hiding it. Righto. So we had the crypto greed and fear index. We have the current fear reading of 29, so pretty fearful, it seems. Pretty obvious, nothing to really go against there. So it's that's happening. And 29, so I've had a bit of a peak up. We've had a bottom here in 17. Okay, the 17 was the bottom there just the other day, yesterday, and now we're at 29. And we've been around these levels. Okay, so July we had a bit of a dip. Going into sort of mid to late July, okay, we had a bit of a big shoot up down to 70 levels, okay, because we had a bit of a rally up in price, and we're down here during the dip, first big dip. Now we had this next big dip, even bigger dippity dip, and we're starting to shoot it right up, okay. So will this continue higher? We don't know. I think God knows that one. So, last time we were sort of down these readings, we had to go back. I'll click on the maximum chart. And last time we were here, look at these readings. This is around 30. I can't really show you properly, but 30, if you look across here, it's 30. So below 30, last one was September of 2023, so a year ago nearly. Okay. And then going back even further, we saw these around the very bottom of the market. It's sort of at the bottom for Bitcoin and most crypto market. Bottomed around here as around the 20s, 30s, the 20, 30 mark. And then we saw even lower fear in June, so mid that year. It wasn't even the bottom. We got an even bigger dump in price, but the crypto greed and fear went higher. It was less fearful for some reason. And then, see lower readings again, going at the start of the year as the Fed freaked the markets out. Okay. December. And then, May, June, which we had that dip in 2021. So we haven't really gone down here durably. We went to 17, whatever it was here, I've mentioned before, but we're not really the sub 10 level, okay, where it's really fearful, Can we get back down there? Yes, we can. No problem. We had the COVID scare there. So black swan event or just a recession in general could really get us down there because we really just wicked there and then we sort of shoot back up. We didn't sort of durably stay below 20, okay, for quite a long time, going back to 2022. So we haven't been there for a while. So need durable closes below to really get fear cracking in the markets. We haven't seen that yet, okay? Just showing back in the historical crypto greed and fear index. So just waiting on that because this is not durable. This is a wick, bang, straight back up. And these ones are a bit more durable, okay? Started down there for a bit longer, but bang, we just did not want to see more pain, we just wanted to see a big bounce, and we got that in price, and that just reflects with the greed and fear. And now we have the Bitcoin imminent death cross formation, okay? So the death cross is on the daily chart, you got the two MAs, moving averages, and we have the 50 in red, and the blue, we have the 200. So when the 50 crosses below the 200, we get a death cross, which is technically it's bearish, okay? It's a bearish reading. The MA is saying that trend is going to the downside and catching up with price, as we've seen a big separation here between the moving averages. See, it sort of separates and the 200 specifically, you can see how it just sort of curves up and consistently just rises, nice and steady. The 50 is more sort of up and down, but the 200 is more even and predictable. And then it starts to flatten out. And then obviously the 50 starts to durably come down hard and then cross below it. So that is forming right now. And I'll show you on the charts what that looks like. So here's a price of Bitcoin. Okay. So all the drawings and that, but you can see sort of we're on a downward channel, up, down, up, down, up, down. So it's in this channel pretty clearly. And we had the 50 in pink and the 200 blue, and we're just about to cross here, okay? So we'll go back historically to show what happens. It's not really that much. So once you see a durable, price action above and the separation occurs, okay, here, so the bullish cross, the golden cross, which is the opposite of the death cross. So 50 going above the 200 is called the golden cross, okay? So that occurred in 2023, early that year, and price stayed above it for a fair while until August, and we crossed down, price did, and then the cross happened, okay? The death cross occurred. What happened? Sideways, and then boom. So really nothing. Didn't really trigger that much panic. It's just showing you there, that was the summer. It was just boring, just sideways, and the death cross, which is supposed to signal more downside and more fear and more get rid of your bags before it's too late. The end of the world's here, but clearly it didn't. When it triggered, it didn't even go down from that point. It just went up. Didn't even go lower than this candle, and it went higher. So that was 2023. Another occurrence here was in 2022, of course, the start of the bear market, and we were above it, and it separated pretty durably, and see how far it separated, and price quickly crashed down. The 200 MA bounced off it for a bit, and we broke down durably, okay, below this wick, and then after that we had the death cross, Okay. And then price did go lower, shot off side even more, and then it shot up. And we traded sideways and we went down. Okay, so that was the start of that bear market, which is 2022, which makes sense. Bear year. But not long after that, we did see a pump going into it. Okay, and another dump, but sideways and then down. So that was that one. This one here, 2021, we had the China's banning Bitcoin scare and Elon Musk's concerns about its sustainability, and it crashed. And then, boom, got the death cross after this, after it had been going up for a very long time. As you can see, from May 2020, we stayed above the 20, stayed above the 50 moving average stayed above the 200 for quite a while. So we got to May of 2021, okay, and then into June, so over a year, and then it occurred, and then we just traded sideways and then shot up. So that was bullish because it's in a bull year, which makes sense. And we didn't really break these lows to durably say that, okay, we're going lower. We didn't break them, so it did trade sideways and go higher, okay? This one was similar, but it did break this low, which is different, okay, to this one. Didn't break the low. This one did and shot up. And then it sort of rose and people thought, okay, we're going higher. We're going to this is it. We're going higher. We are going back to the all-time highs. Boof, gone, sold off. That was that, okay? And we got 2019, which is more favorable, more comparable with where we are in the current environment with interest rates. And you can see, this is a tightening cycle, mid-year cycle, 2019, and we stayed above it. We sort of broke out golden cross in April, okay, and then in October, we had a death cross, okay, as you can see there, and we rallied into it. We actually shot up into it, and then we couldn't break this high here, okay, to really say, okay, we're in an uptrend. We didn't break the highs, made a lower high, and then we shot down, broke the low, traded down, and then shot back up, and then crashed again. So it was more bearish here, 2019, due to the phase of the market that we're in and the monetary policies that were going on. I'll just show you interest rates real quick to show what I'm talking about. So we did have, we had rising interest rates all the way up from 2015 to 2019, right? And they went flat. And then they went flat, okay. And then after that went flat. Whoops, I lost it. We went down, we cut rates. And after we cut, right before we cut, okay, right here, what happened to Bitcoin? It pretty well topped, right? Bitcoin tops just before the first rate cut, which was here. So we had June 20th, and then a month later, we had the first rate cut, and that was the start of the downtrend, right? And then rates just dropped, and then it just slammed right down, obviously with the COVID crisis. And before that happened, we had a death cross, and you can see price action was, in a downtrend, as you can see here, like that, lower high right after the cut, and then sort of trade sideways. We had another lower high, and then we durably broke this level, smashed right down, and then a bit lower, and then shot up. And then after this death cross, we did see a lower low to bottom out, okay? So that was that section there. And it's sort of similar to where we are now with the market, and see the rates go up from the bottom here. We see the flat, and then we rose from 2022 to the Fed to fight inflation. And then the rates flattened out, and then we haven't cut yet, so they haven't marked the top. But before the top happens, we'll see, we might see another push higher before the cuts. We'll have to see what happens before that happens. happens. And this death cross could be the start of a push and then a sell-off, like we saw in 2019, right? With price, It shot up into this death cross and then just went down and bottomed out until we had a big push higher. But we couldn't break this high, okay? And then we just, with those slam rates, the markets freaked out and then bang. That was 2019 death cross. All right. I just want to show you interest rates just to show you how comparable it is now and the current environment that we're in. It's very, very comparable, okay? And this here is another one, which is 2018 after this big push up. It was the start of the bear market and it had been rising for quite a while. It was back in 2015 November, then going into late 2017, early 2018, and then mid-March. And then we had the death cross here. Then what happened? Price, was bottoming out and then it shot up. So it rose into it. And then we sold off even more. Okay, it went even lower. And then you can see what price just could not catch a break. And just big triangle here. As you can see, I'll just draw it up. Oh, sorry, magnet. It's a pain in the ass. Bloody magnet. Price traded like a triangle, a wedge. And then we smashed through it, okay? So that was the start of the bear market, and that was a bear market year, 2018. So it made sense. It happened. So the death cross did work in this scenario. And we'll go back and just show you one more. We had a death cross here in 2014, start of that bear market, so 4 years prior, the bear year. And this is after it had been rising for quite a long time. So 2012 kept rising and rising and rising and rising. And for the 2013 peak, first one, and then we had a secondary peak, and then it just kept rising, 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 as you can see, and then we finally had a cross 2 years later, pretty much, and then a death cross occurred. We rallied up into it, and then we sold off a little bit, but then we had some further upside. It wasn't the end of the rally. It did go even higher, and then we did ultimately fail to break above this high. We did break this, so we were in an uptrend on the daily. The moving averages didn't suggest that yet. And then we sort of started consolidating a bit, and then it's a cross, the golden cross, but it was too late. So it's not a very reliable signal. I'm just showing you how it's not very reliable, not very predictable. People reference it so much and say how important these moving averages are to keep you in like it's good when it's in big uptrends. It works really well. Okay, the golden cross, for example, crossed here. And look, you can hold your investment all the way until it crosses back down, okay? And it just kept staying. Show you how logarithmic. So you can hold, right? Don't sell yet until it crosses, and you can sell, okay? So you can get out of the market. It gives you a really entry and exit level. But, it went higher, okay, from that point. So you could have got out a bit sooner, way up here, but you're getting out down at like 400, 450, when you could get it even higher for 800. So you're waiting this big drop, 50% drop nearly, to get out of the market when you could have got profits up higher. And that's why you have a strategy in place to get yourself, out at the right times, as close to the top as possible, and when there's peak euphoria, and before these things occur, because moving averages are very late. They're very slow. See how slow they are to catch up, especially these two. And price already dropped significantly from this point, from the top, before this cross happened. It dropped 60%. So it's a big drop. You're missing out on those profits at the top there. So you can use it as a strategy to get out, but it's not really the best, because it goes up and down and up and down. And see, it's when price goes sideways like this, it's very unreliable, okay? It goes up, we're going up, and then boof, big sell-off. Then death cross, we're going down, and then boom, we go up. Then we have the bullish cross. We're going up, boom, sells off, tricks people. And then it continues the uptrend. So really, it's not a great, reliable strategy. The moving averages, on their own, okay? On their own, they're terrible. You've got to combine with other indicators and other factors to build a strategy for yourself. Okay, so see this death cross. Oh, we're bearish. Yes, it worked. And that shot up. Oh, what? Oh, we've got the golden cross. We're going up. We're going higher. And then, boo. See you later, guys. And then we had a death cross. Oh, no, this is it. We're going to go even lower. This is just a fake, a trap. and we're going to go lower. This is bull trap. We're going down. And then it just shot up. So it's not that reliable on its own, okay? And then we stayed up, the 2021 bull run, and we crossed below it, and people thought that was the end. It was over. And then we went higher, okay? So see, it just doesn't work that great. When people say the death cross, or the golden cross, this is what they're referring to, is the 50 and 200 moving averages. And as you can see, it just didn't do much in the summer there. It just traded sideways, and then just, see, it wasn't under it for very long, and then boom, 50 went above the 200 pretty quickly. And we're seeing it cross again. Nothing to freak out about. It's just another fear-mongering tactic for the influencers to shill and get their point across, but it really doesn't do anything. I'm just proving you, going back historically, Bitcoin price, and that's that, okay? Meanwhile, people's talking about that. If you want to see the moving averages on the Bitcoin dominance, it looks like it's being an uptrend for quite a long time. And ever since this down period here, okay, when the Fed entered QT and they started raising rates not long after, what happened to Bitcoin dominance? It bottomed, and it's been going higher and higher and higher ever since in late 2022. And then all of a sudden, shoom, it shot up, all right? And the moving averages have been above each other for quite a long time. So it's been a bullish trend. And it doesn't look like it's slowing down. It's just going higher and higher and higher. And they're telling you to buy altcoins on the dips. Wrong, wrong, wrong. Don't do that. Stick to Bitcoin, because Bitcoin is outperforming, okay? Dominance is going higher and higher and higher. It just shows these moving averages. And they're different on every time frame. So if you go on the 3-day, they look a bit different, okay? So it looks different. And they crossed a bit later, okay? And a bit more spread out the daily. And you see that it stays, separated for a longer period of time, right? Go back to the daily, and I'll show you look how messy it is. Look at this. Up, down, up, down, up, down. Fake out here, right? Cross, it's just messy. It's just messy, and I don't like moving averages. It's not part of my strategy. But the death cross and the golden cross is what they refer to. Is this, and on their own, it's absolutely terrible, terrible indication that we're going further down. It's just terrible. Okay, just wanted to show you that. And dominance just keeps going higher and higher and higher as alts bleed to Bitcoin, and Bitcoin outperforms as always in these cycles. The QTs and QEs. QEs it underperforms. Okay, so it goes down, and then when the Fed tighten up and they sell this balance sheet holdings, as it goes back up, it takes over market share. Same as this QE period here, it just collapsed. Okay, because they were buying like crazy here, and then the QT it outperforms. Okay, altcoins. So they're the things to look at. It's the Fed is much better indication of where price is going, rather than moving averages, which just frequently change and just chop up and down. And that's just that, okay? So that's that. I'll just go over ETH real quick, and we'll finish up there, okay? So, same with ETH, with these moving averages. It crosses over, golden cross, right? We stay above. As long as price stays above and it stays intact, with lows made down here, and we did bounce off the moving average and shoot higher, and shot up, and then sort of consolidated, broke down, and see how late it was. It broke down before it crossed. So if you want to get out before this cross, well, guess what? You've already missed out on this. It already dropped heaps. So that's that. It's very lagging, okay? And then price just goes above it. All right. You've got trend lines. You got resistance and support levels with price. Holding support there. It dropped lower. But even then, it looked bearish, but you had a rising trend line, okay? So you got to really use multiple confirmation signals before you confirm that price is definitely going lower. And if we did break below this trend line, then it would be probably in trouble, okay? Because we had support broken here, as you can see, and the moving averages crossing, and then you had to have one more final confirmation, which was the trend line breaking, and from here to here, okay? And we didn't get that, okay? So, yeah. That's why I just want to emphasize why it's important to combine different indicators and price action tools, okay? So Yeah, bounce off this 2000 on this. This is on Kraken Exchange. So back to this trend line again. And then we've got a Fed rate cut here coming in September. Price is struggling to get above this topper end of this trend line, which is not looking good for ETH. And we're getting its death cross as well. So it's occurring on Bitcoin and ETH. So who cares what's going to happen? It's not going to really do much. If it shoots up, it might like to do that. And then break down into rate cuts. Okay, so that's what's really more important is rate cuts. Okay. And I'll show you on a weekly chart. It's a bit better to see. I'll get rid of these moving averages because they're annoying as hell. And what's more important is what the Fed does, okay? So cut rates here, see the cut here on the orange, and prices in this consolidation wedge, all right, of this rising channel, I should say. And we had a clear support trend line going up on the weekly. It didn't break it until we consolidated a little bit right before the rate cut. After the rate cut happened. Sorry, obviously. And then we get the rate cut. And then not long after that, a couple of weeks later, bang, we broke the trend line. And then we made a lower low to this level. And then made a lower high. It couldn't break. And then when they slammed, the rates were just gradually cutting. So price didn't really do much. And then it dropped. Okay, eventually. And then it rose up because we flattened rates. Rates were sort of predictable. And then after that, in the late February, they slam rates. So I said big drop, boom, 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 boom. So that one cut there and a cut there. 2 cuts, just like that. One big drop. What did price do? It dropped. So this is right after this breakout of this channel, okay? After rate cuts come. It just wasn't quite bullish. This was bullish because it was flat, but if the cuts were more aggressive, this would have dropped even more, okay? So this is the reason. And then you go to now, and we haven't cut yet, okay? So when the cuts start coming, we should break this lower bound trend line and then break lower after, it could be straight after or a little bit consolidation and a break, okay, like he did back in 2019, okay? As you can see there, and we broke and we went lower. And ETH from this level, so I'll just bring a measurement tool there from the 42% from the breakdown period. Okay, 42%. And, from this low here, or roughly around these levels, the breakdown period, okay, 42% was a 50% drop. Pretty similar drop. Could this occur? Yes, it could. It was a smaller asset back then, okay, it was smaller in market cap, and it's a lot bigger now, so it could just drop to here, 1,500, which is way more likely, of course. We had a support level here. I'll just draw it. It's easy to see. And going back to these levels, okay. And that's just pretty much $1,500 is there. It's a 25% drop. So it's very, very likely. And then if worst comes to worst, I'm seeing it go back down to the lows it made in the bear market, back to $1,000. So my price predictions, and it's all to do with the aggressiveness of the cuts and how bad the recession is going to get, okay? So that is that. So I hope you enjoyed this video, just going over crypto greed and fear. How we went right down to 17 below 20, and then we spiked back up and back up the 20s again. Okay, so we're not hovering below 20s for very long, like we did back in 2022, and it was pretty bad back then. So yeah, we need to see durable down period in the markets to really show us even more fear, because that's when you want to buy when there's like maximum fear. Below like 10 would be really, really good. But I'll be looking at buying. It's really max fear. This is the best time to really start buying altcoins, particularly because they're high risk. You want to get into the lower levels to lower your risk for higher reward. And then we looked at like NVIDIA's CEO, Jensen Huang, just keeps selling consistently. It's not a big amount compared to what he owns, I don't think, but nevertheless, it's still selling pressure. It's still getting out, and he's putting some cash on the sidelines in case there's a big drop. Okay, he's preparing himself. He's he founded the company. Guy started this company, and now he's getting out aggressively, as it seems. And he's not the only one. Warren Buffett, Jeff Bezos, And there's probably many others as well that I've mentioned and showed my videos that are doing the same thing. And yeah, just got to be careful what's coming. It's pretty gloomy, doomy. With the Fed, what they're going to do with cutting rates, I think at the start of the rate cuts, they'll cut because of the unemployment rate skyrocketing, and then that'll cause fear in the markets, and we'll see lower prices due to that fear. They respond to a crisis with the cuts. They don't do it to make everyone feel good. They do it because of bad economic weakness, and whether it's politically pressured to not cut rates, we'll see if that goes down or not. I still think they'll do their job regardless of the candidates, what they want the Fed to do. It's got nothing to do with politics. It's to do with they've got to do their job, and it looks like they're a bit late to the party again. And you looked at the Death Cross and the Golden Cross, showing you historically what it does with Bitcoin price and how it really doesn't do much. You can go further, you can rally up into it, or just drop down straight after it, and go back up and then down. And yeah, it's very unpredictable, and it's not very good on its own. But if you can combine it with price action and trend lines and that, other indicators, you can build yourself a strategy, okay? But it's not good on its own. Okay, I just showed you on this video. We'll get the Death Cross occurring for Bitcoin now, and ETH as well. So Ethereum's getting one, and yeah, it's just another thing you'll see on Twitter, the sentiment and people talking about it. There's this big moment to see more bearishness, but price will probably do the opposite. It'll go up to trick people to say, no, it didn't work, and then it'll go down again. Like 2019, I'm seeing something similar, to rally up going into it, okay? To rally up, I'm seeing it price go up to around 61K is what I'm thinking for Bitcoin, and then I think we'll find resistance there, and then we'll sell off. Okay, and that'll be pretty much the short-term top, and then we'll go down further, I think. That's what I'm seeing happen. A lot of people saying that we could see rally into the end of the year and still see left translated cycle because we're in this sending channel, and sending channels can be bullish patterns, okay? Like sending wedges is the same thing, or triangles, is that they are, or flags, they are bullish patterns, and they break to the upside, but not always, but sometimes they do work. Like I said, same with moving averages. Anything on its own, don't rely on it. You've got to combine it with other indicators to confirm. And yeah, and they're still seeing that they're going to get to 100K by the end of the year still seeing it. I don't see it at all. I just see 61 is a short-term top, and then further downside going in the year. And my predictions are nothing financial advice, but I do see Bitcoin going to 36 to 41K. And potentially even lower into next year, seeing how the recession goes. We don't know. Could be mild or could be terrible. It really depends on the banks and just the world in general, the economy, how bad the job market gets. And yeah, so that's that. So cover those topics. All right, so if you enjoyed this video, please smash the like, comment your thoughts below, subscribe to stay updated. Be sure to check the links below, and I'll catch you in the next one. Cheers.